Welcome to the Fintechub community event. This is our second event for the cohort. We have a guest with us who everybody has been excited to have on this session. So we look forward to the next hour of conversation with the guests, who I'll introduce shortly. And I think you can see on the flyer in front of you. My name is Annette Kasebele. I am a policy specialist from UNCDF, and I'll be moderating the conversation this afternoon. I think ahead of the conversation, I wanted you to make a note of a few things to take a note of. So we'll be recording this webinar. The session will be running for an hour. I'll start with a few questions, and we'll open it up for you to share or to ask any questions or share comments. So as we are speaking, you can type your questions on the Q&A session below the screen, but also you can feel free to raise your hand if you would like to speak. But I think if you want to speak, please make it brief so that others also can get an opportunity to speak as well. So welcome, and thank you for making the time to join this conversation. Thank you. So I'll stop sharing so that at least you can get a better view of us. I think for now we have just the video of myself and Peace. And to get started, I think we can get started with a quick question that just to warm up the room, Peace. Oh, sorry, apologies. I haven't even introduced Peace. Apologies on that. So we would like to introduce Peace Uwaze, who is a seasonal executive from the National Bank of Rwanda. So she's the executive director at the Financial Stability Department. So we're great to have you, Peace. And I think, like I said earlier, everybody's waiting to hear from you. So thank you for making the time to speak to us. So I'll start with the first question just to warm up the room and kickstart the conversation. And I think this is related to getting your point of view and understanding the licensing framework for fintech in Rwanda. We have been getting a lot of questions from the fintechs that we have engaged with, either during the time when we are conducting the fintech landscaping study, but also some of the fintech that we are engaging with within the Accelerator Hub, where this feeling is that there isn't clarity on how they can acquire certain licenses, particularly for those who are engaging in payment services. So we would like to give you this opportunity to elaborate the current licensing framework or regime in Rwanda for those companies that are looking to engage or to provide financial technology services. Over to you, Peace.
Thank you so much, Annette. Thank you, Fintechub, for having me. It's always a pleasure for me to meet with you, even though we haven't met in a while, in a long time. But it's always high energy every time I've met with the Fintechub colleagues and the ideas that are exchanged. I believe the last time I participated, we were talking about ways for us to collaborate better between the central bank and fintech practitioners, and that was just before that survey was done, funded by the UNDP. So it's always a pleasure for me to participate in this. So going straight into the question about the licensing framework around fintechs, one, I wanted to clarify that we don't have a dedicated regulatory framework for fintechs. Our regulatory approach as the central bank is service specific, should I say. So we do have a framework for, let's say, banking services, deposit taking institutions. We have a regulatory framework for insurers, for pensions, for payment services. And so regardless of the mode of delivery of the financial service, the framework will apply, one and the same, whether it is brick and mortar or technology based. So in that regard, you pointed to the fact that most of the fintechs that we have are in the payment space. And in as much as that is great for us to start, I think that that should only be the beginning. I see a lot of opportunity in other financial services that are regulated by the central bank, be it in deposit taking, and maybe, for example, in banking or deposit taking financial institutions, it may not be directly in the space of actually providing the service, but enabling fintechs. When I got the call to participate in this discussion, I was actually in a banking hall. I hadn't been in a banking hall in a very long time, but I'd had a few issues with my bank account. So I went into the bank to resolve the issues, and I had to fill out account opening forms all over again. I filled out maybe, I don't know, maybe 3 or 4 different types of forms. I had the account opening form itself that, looks at my details, the KYC I'd suppose. I had to fill a form requesting for a checkbook. I had to fill a form requesting for internet banking and everything. And I kept telling the people that, were overseeing this signing of documents, I'm filling out these forms, then somebody's going to take this information and enter it into a software somewhere, upload it into, I was just thinking of the whole process and how manual that is. So when I think it's Alex that called or texted asking about this, I was thinking, why is it that nobody has entered into this space to deliver a service for the banks to ease the account opening and KYC process? So I see a lot of opportunity in other areas, same as insurance, intermediation. We're still relying on agents and brokers that fill out paperwork that is very a manual process, and there's opportunity in there. But that said, so I'll go into the specifics of the question that you asked. The regulatory framework for payments, and in that space we have, I would say, 5. 1 second, let me just clarify that. Yeah, so in the payment space, we have 5 different licenses that we do issue out. One is an electronic money issuer's license with the minimum capital requirement of 200 million. And that's basically for any service provider that is in the space of generating, issuing, circulating electronic money. We do have licenses for remittance companies, and these are companies that are basically facilitating the transfer of money from one individual to another, be it locally or cross-border. And the minimum capital requirement for that is 30 million francs. We do have another license still within the payment space, the payment service provider space, for payment gateways. And this is basically for service providers that create platforms that enable people to pay each other, or people to pay businesses or for government services. And the minimum capital requirement for that is 50 million francs. We also have a license for payment aggregators, and aggregators are basically service providers that collect payments from different people, and then sit with those funds for, let's say, a day or 2 before those funds are actually transferred to somebody else. And the minimum capital requirement is 100 million for that. Then we also have a license for issuance of payment instruments, and this is usually for people that are providing check printing services. A minimum capital requirement for that is 100 million. I think the question that we usually get is, why are the capital requirements too high? And that for us is based on our assessment of the perceived risk. You will realize that there is some sense of proportionality that we have actually incorporated in the capital requirements that are required. So you will see that, for example, if somebody is simply providing a platform and people are only using their platform as a channel or as a vehicle to transport money from one to another, they're not sitting with that money, then the minimum capital requirement is just 50 million. Vis-a-vis a service provider who is collecting and sitting with the money, before it is actually remitted to somebody else. So there, because of the perceived risk of potential loss of that money, that's where the minimum capital requirement is a little higher, 100 million.
Just to add on that, I think if you could clarify a bit further, probably.
Yes, Anna.
Yes, we understand those are capital requirements. What essentially does it entail? Is this the money that a company should have in a bank, or is it assets, or what exactly capital requirements would entail, just for the sake of innovators who are interested in that space?
Okay. Okay, and as I respond to that, I see somebody had asked to share a presentation. Unfortunately, I did not share a presentation. When I was asked to speak, I was told that it would be, a conversation back and forth. And so I'd appreciate for you to share your thoughts so that, it is indeed a conversation as opposed to me making a presentation to you. So yes, the minimum capital requirement, we don't expect you or the service provider to raise that money, put it in an account, and just have the money sitting in there. That would not be an efficient use of resources. So our expectation is that that minimum capital requirement is funding that you demonstrate that you have, that gives us assurance that you're able to actually run this business. That funding could eventually be used to invest in assets that enable the provision of services, for example, software, or it could be, your computers that you're using, servers, et cetera, et cetera. So it's not money that we expect you to put in a bank account and just freeze it there. I don't know if that responds to the question, Annette.
Thank you. It responds. I hope the audience also understood. I just wanted to have a bit more clarity on what that entails. Thank you.
Okay, all right. Yeah, so that's basically where we stand. And the other question that we tend to get a lot is why such a for lack of a better word, why such a rigid regulatory framework? Mm-hmm. And I think for us, our framework is based on our perception of risk. It's been said a number of times that, the way financial services are provided is changing drastically, maybe from brick and mortar to technology enabled. But from where we sit as regulators, the perceived risks don't change, right? Whether it is, if you're in a lending business, the risk that you will lend and the loans will go bad, will not be repaid, remains the same, whether the loans have been provided on a platform or in a branch. If you're taking deposits from the public, you may take those deposits from a branch by collecting cash physically, or you could do that with a technology-enabled platform. But that still doesn't change the perceived risk from where we stand. I thought that those were just a few things that I wanted to share in that regard.
Okay, great. Thank you so much, Peace, for elaborating on that. But I think just a question to sort of like continuation on that for some of these startups that are looking to get into this space. So what would you say is the best time for them to start engaging with the regulator? Do you reckon that they should start this conversation early on when they are still at the ideation stage to figure out where they fit in within the current regulatory regime? Or would you rather have them start engaging with the regulator when they've already demonstrated some traction in the market and probably they are thinking about growing and scaling?
Yeah, good question. I think that one, we need to be aware that financial services is a highly regulated space, not just in Rwanda, globally. It is highly regulated because of the perceived risks that I spoke to earlier. My recommendation, therefore, would be that the engagement is done as early as possible. An engagement could be as basic as what is the framework that you have in place for this particular service that I'm thinking of delivering? And I think of that in terms of, like anybody that would be starting a business, you're thinking through what you want to do, putting together a business plan, a strategic plan, I would highly recommend that at that initiation stage is when you at least try to find out what the regulatory framework is around that. We have to be aware that the relevant laws, or the sector specific laws, as it were, let's say banking, insurance, payments, actually prohibit the provision of these financial services without a relevant license. It is actually a criminal offense punishable by law. So we wouldn't want to find ourselves in a place where we're having back and forth engagements with service providers. So in my view, the engagement should be earlier on. And then if there is a framework that, or rather, if you're thinking of a service that is not necessarily regulated by the central bank, and we have to remember that there's two regulators in this space in terms of financial services. There's ourselves as the central bank, and of course the Capital Markets Authority. So it's important that we clear out, does this service fall within the scope of the central bank or the capital markets? And if there's no framework for that, then that's probably, I know that you had said would have a discussion around the sandbox, then test this within a sandbox environment. But in the long and short of it is, in my view, start as early as possible.
Great, yeah, great. So good thing this lends itself to the conversation around the sandbox, because that's another question that I think we've been hearing a lot from some of the startups that we are engaging with. I think, again, it's the issue of clarity and understanding what the sandbox is all about. At what point should innovators be looking to engage or be part of the sandbox? What is expected of them, or what are some of the requirements for them to be part of the sandbox? And I don't know to what extent the central bank has done some reflection since the launch of the sandbox. If you could share with us how that has been able to catalyze innovation within the ecosystem.
Yeah. So we did actually put in place a sandbox framework in 2018. Since then, we've had a lot of we had a lot of interest in the sandbox, but from our review, we actually realized that most of the requests that we were getting were for services that were already regulated under the existing legal framework. So just remind ourselves that the sandbox exists for new ideas that are currently not regulated under the banking law or the insurance law, the payment systems law, the pension law. We now have a regulation for non-deposit taking credit-only institutions. So if the idea is very new and does not fall within that space, then that's where the sandbox comes in. So most of the ideas that the requests that we were getting were actually for ideas that were being tested, and probably had not yet reached maturity, or maybe the service providers were not yet at the point where they felt that they could meet the regulatory requirements. So so that's the majority, maybe 99% of the requests that we got. So we only had one request that sort of met the requirements for a sandbox. But even that, through the testing period, we ourselves and the service provider also realized that there were still a lot of gaps that needed to be closed. So they've gone back to the drawing board to reassess their model and the connectivities around that. The reflections on our side, I think I would say that there's two main issues that came out. One is the need to actually have this sandbox approach as a cross-cutting one, so that you don't have service providers coming to the BNR, going to RURA, going to capital markets, and instead have a centralized sandbox that actually is supervised or overseen by all the relevant regulators right now. So that's something that we're currently engaging internally, and then with a view to bring on board RURA and Capital Markets Authority so that we have a centralized sandbox for the financial sector going forward. That was one. Two was that we also realized that in as much as we had put this in the regulation, the payment service providers regulation, that we had a sandbox established at the central bank, we internally also we had not developed thorough guidelines to help us assess those that were requesting to apply for the sandbox, how we would work with them, the testing period, what do you do when XYZ is successful or is not successful. So that's also something that we're working on, the guidelines on how to actually operationalize the sandbox. I would say that that particular service provider that we had was sort of a test and learn exercise for us. So we're borrowing from that experience to develop very detailed sandbox operationalization guidelines, which I'm sure that we will come back to discuss with the industry whenever we have that ready.
Great, because my next question was going to be, when will that be coming? But I think it is still in the works, right?
It's still in the works, yes.
Okay, great. So there was another question, I think, before I open it up to the audience. Again, I think, so the fintech ecosystem, you tend to have those ones who interface with the end customers and those type of companies that probably provide financial, technological solutions to financial institutions, right? So I think those who play in the later groups, there have been some concerns on whether the central bank is looking to regulate those. Are there plans to start regulating those technology companies that provide services to financial institutions? Or what is the central bank thinking around those type of companies?
Okay, so right now, our mandate is to supervise financial service providers. So those that are actually client facing, you're taking deposits from the public, you're taking policy premiums from the public, you're collecting retirement benefits from the public. That is our mandate. So I do not foresee a situation where we extend our regulatory arm to service providers of the financial institutions. However, where that could apply is we do have within our risk management frameworks for financial services, we have come up with guidelines or let me say guidelines. We actually have a regulation on regulation on outsourcing. And the reason we came up with that is that we realized that many times financial service providers are actually outsourcing their, let me say, their non-core activities to third parties. But those third parties are also a source of risk to the financial service providers. Source of risk in terms of cybersecurity, because of the connectivities that you have between systems of the service providers and the systems of the banks or insurers, etc. There are risks associated with business continuity. So, for example, a bank has outsourced its payments processing, let's say, to company Y. Company Y goes down. That indirectly has an impact on the delivery of banking services. So because of those risks of cybersecurity, business continuity, data privacy and protection, that then becomes indirectly, and we then indirectly become interested in the services of enabling companies. We may not go out, we don't go out directly to supervise them, but then we put a lot of responsibility on the institutions that we supervise that are actually outsourcing services from such companies. So I would suggest that maybe for anybody that is interested in that space, that you also take a look at our outsourcing regulations so that you understand our expectations. The central bank will not come out to you directly, but the service provider will expect you to meet certain requirements around protections of data, mainly those three issues that I've talked about.
Thank you very much, Keith. For the audience, I think you can start putting your questions on the Q&A again below the screen. Otherwise, I'll continue wrapping up with my questions if I don't see any questions coming up. I think the last question piece, as you are elaborating, I think it kind of like brought me to start thinking about some of the, what are some of the challenges, probably from where you sit as a regulator, that you foresee coming as the fintech industry is evolving, or the fintech ecosystem is evolving in Rwanda, and how are you responding to them, really? If there are any of those that you have done reflection in, how is the bank or the central bank is responding to them? Oh, you are on mute. Sorry.
Yeah. So I think that in terms of the challenges from our regulatory perspective, I would say that the first is, I touched on it saying that regardless of how financial services are provided, risks remain the same. So the risks are remaining the same, but the service providers are changing. They're becoming so many and very diverse. So the challenge on our side is, one, on upskilling ourselves, remaining in touch with the developments on the market. Most times we play catch up as regulators, as opposed to leading the way. So I think for us, that's challenge number one. Challenge number two is, as we have more players in the sector that are interested in operational efficiency, we are seeing a lot of interest and moving to the cloud. Now, that's a good thing in terms of operational efficiency, but we're also getting concerned about the concentration of risk in these few service providers in the cloud computing space. So then we start to ask ourselves, in the event that Amazon or any of these other service providers is down, what does that mean for us as a country, where you have XY% of our service providers actually relying on these 2 or 3 global service providers. So that's also an area of concern for us. I talked about data privacy and data protection. As a country, we previously have not had a data protection law. It is in the drafting, it's in the making. I believe that probably by the end of this year that will have been gazetted, will have been finalized. But so growing concerns around the use of data that is being collected by so many people, being accessible by so many service providers, and how that information is being put to use, or how it could better be protected. And then I talked about cybersecurity, of course, as we become more digital with so many touch points for service or for consumers, so does the risk of cybersecurity also increase. I talked about business continuity. We've all had an experience where a service provider has been down for a day or two, and the outcry is just enormous. How do you then ensure continuity of services in the event that a service provider is down? We have certain sectors or services that are very highly concentrated, where you have one service provider, in some instances, controlling 40-50% of the market. We have cases where a service provider controls about 90, 97, 95% of the market. If that service provider goes down, what happens in terms of provision of payment services, banking services to the market? So those are some of the areas of concern for us as regulators.
Well, thank you. Thank you, Peace. I see there are some questions that have come up. I can start with you, Olivia. Olivia, I see you have raised your hand. If I allow to speak while I go over other questions, please make it brief. Hi, Olivia.
Hi, Annette. My question is related to what just said, Peace. It's about those big players controlling a big share of the market. They also, it happens they not only control a market share, but also other service providers depend on them. My question is there any regulation like protecting those other players, relying on bigger players, like for them to be protected in terms of abuse of monopolistic position. Thank you.
Thank you. Peace, did you get the question?
I think somehow, I guess it's about competition. Yeah, I'd understand the question to be around competition.
Mm-hmm.
Yeah. Do you want me to respond to that now, or you want to take a few more questions?
Okay, then I can take a few more questions because there are some also on Q&A. So one was around what are some of the formal channels to start engaging with the central bank. I think you touched on that a bit on the sandbox, but I think if there are any other initiatives that the central bank has, that would be helpful to learn. Other questions, it's around transparency, again, in terms of like payment system and how they are licensed in Rwanda. Again, I think you had touched a bit on some of the requirements and how the process works, but if you could elaborate further on the list of payment systems that operate in Rwanda and how they're licensed. So we can take 3 while others are coming in, if that's okay.
Sure. So on the first question, I think that, I mean, if I were to respond to this, I would say that is the responsibility of the competition authority. I don't believe that we have a competition authority that has been formalized as yet. Somebody could correct me here. I think the idea is to have a competition authority under the Ministry of Commerce, but I think that is still in the making. So I would say that our interest as BNR has primarily been in protecting financial consumers. More than protect, maybe indirectly the service providers as well, but the priority being consumers. Now, where we do realize that that concentration is high, our role is more like on the advisory side, should I say, and creating or creating an awareness about the risks that are actually emerging with that concentration and how to create a fairer playing ground. For example, and this is something that we've only started working on maybe in the past year or 2, making sure that our regulations are also proportionate to the emerging risks. I'll give you an example for if let's say, and this has mainly been in banking, and maybe that will cascade into other areas as well. The regulatory requirements that you place on a number 1 bank vis-a-vis, let's say, a tier 2, tier 3 bank, we've also had to pull that back and actually make that proportionate so that you give room for the smaller players to actually grow. So proportionality in terms of governance structures, in terms of technology requirements and things like that, so that you create room for the smaller players to grow. So that's what I would say around competition. But I think that the onus on us as a country really is to have the competition authority grow and functional and operational. In terms of the channels to engage the central bank, I think that what we have had so far is really maintain an open door policy. If you write, if you email, if you call any of us, be it myself or John or Karamuka in the payments space, for those who are in that space, we're always open to receive, to engage, and to guide. What I'm hearing from this, and it's probably something that we could build on from this forum, from this FinTech forum, to have a more coordinated, formalized way for us to meet with the players in this space, so that we can openly engage on emerging issues. I think that that's probably something, that feedback that I would take from this. But otherwise, I can assure you that our doors remain open, and I hope that none of you has been turned away when you've called or messaged to ask for any specific information. The other is transparency on licensed institutions. If that list is not on our website, it will be an error on our part, and it's something that we can quickly correct and put up there, because our policy in terms of transparency is actually to publish the list of licensed service providers. We have that list for banks, we have that list for insurers, for insurance brokers and things like that. And so if that list of licensed payment service providers is not on our website, that would be an error on our part, and it's something that we can work on and ensure that it's published. But our commitment is to have all licensed service providers published on our website for transparency. So if that's not there, I'll take note of that and ensure that it's done.
Great. Thank you, Peace. We have another round of questions that have come up. So one, again, I think it's going back to licensing and being able to do some traction of a product in the market. So the question is about, it's very difficult for a startup essentially to raise funding without, to raise funding for license. But at the same time, they can't prove that they have traction of users without having a license. So what advice would you give to a startup to be able to prove their products and be able to raise fund afterwards when there's no way to do it without a license or a sandbox, in a situation where they can't get a license because they don't meet the capital requirement and they can't be part of the sandbox? How would you advise startups on that? So that's the first question. And there was another question again about e-money licensing. So the question is that you talked about capital requirement, but you didn't mention security money. That I'm not sure what this is aiming for. Sarah or whoever put this question, if you could clarify, because I think it just ends there on security money. I'm not sure where it's ending, but I see the hand from someone else who I will allow to speak. Kevin, if you could make it brief as well.
Thank you so much. You can hear me now? Yes, thank you, Peace, for a good presentation. Mine is very simple and short. It is I wanted to inform that currently we have Rwanda Inspectorate Competition and Consumer Protection Authority. It is now operational, so that authority, it is one regulating or inspecting all competition in the country. It's now established and it is operational. Yeah, another thing, it is very well noted that our national bank is a regulatory. It's one regulating all financial sector, all financial institutions. And I want if you can help us to clarify. it can't be regulator and handle any conflict. When any financial services or products that you are regulating, the National Bank regulate, if there is any complaints between those institutions, do you have an authority, or when it is not internal complaints, when it is external dispute, which institution handle that issues? Because National Bank can't be regulator and handle complaint of those fintechs. So I want to know if there is any framework that when there is external dispute, complaint between those or those financial institutions, if there is any authority, if it will go to Rwanda Inspectorate, Competition and Consumer Authority. So I want, if you have more clarification on that, I would appreciate. Thank you for a good presentation. Thank you.
Please, probably we can start with those as we wait if there are any more questions that are coming.
Okay, thank you. Yeah, so the first question on startup funding, that's kind of a difficult one. And if I would request you to put yourselves in our shoes as regulators, when we issue a license, we are basically telling the public, you can trust this individual, or, well, okay, not individual, you can trust this company with your money. In the event that that business fails, then they look up to us as a regulator for their protection, yeah, and refund of whatever money they've lost in that process. And that's why the licensing process is a very rigorous one, should I say. So until we've actually gotten assurance of this business or this company's viability and financial soundness, we cannot grant a license. And I hope that you do understand us, or you can put yourself in our shoes, because we are basically saying it's a stamp of confidence. Go out and collect people's money. We believe that you're able to meet those obligations as and when they materialize. And nothing else gives us, I mean, it's not an intangible, yeah? The trust that we have to develop in this institution is not an intangible. It has to be demonstrated before the license is granted. And so for me, my advice here would be partnerships, collaborations, and don't go through this alone. Don't try to do it on your own. I think that there's a lot of great brains out there that you could put yourselves together and brains, and then tap into funding sources, especially when you're in a space that is as regulated as the financial services. Maybe I'll just pause my intervention there. It's a difficult one, and I do understand that funding for startups, not just in financial services, funding for businesses in every sphere, for startups is a difficult one, but it only becomes more complicated and more necessary for financial services. I didn't quite understand the one of security money. I was actually trying to go through the payment service providers regulation just to get the actual clauses. I haven't yet gotten the right article, but if you can, I don't mind, receiving just clarifications on what the person meant, and we can try and dig up additional information on that if it's deemed necessary. The last one on complaints. Unfortunately, again, and you said it very well, we can't be conflicted. Our mandate is regulation, supervision, licensing, and where disputes arise, especially between service providers, disputes between institutions and customers, that the central bank now has the mandate to also look at financial consumer protection. But where it is disputes between service providers, between institutions, unfortunately, that has to go the legal route. And usually when we get complaints like that, we tell them, seek recourse in the courts of law.
Thank you, Peace. So last question, because I'm aware of time. We are coming close to time. So I'm glad you started mentioning about partnership between startups and some established institutions. So there was a question about how can we make a partnership with financial institutions possible, especially because they also have conditions that sometimes restricts or make it difficult for startups to be able to meet them. As I think this is coming from the point of view that whenever startups are trying to engage with financial institutions, since the financial institutions or the banks and the likes are on the hook for compliance, they make difficult conditions for startups to be able to meet them. So how do we facilitate that?
Yeah, so I think on that, again, I sort of alluded to it when I was talking about the outsourcing regulations. And it's important that even at, initiation, at ideation of the projects that you're working on, that these issues remain at the forefront of your design of whatever products or services that you're developing. So issues around cybersecurity, issues are, and you need to demonstrate to the financial services that you have all these controls in place. Cybersecurity, what was the other one? Data privacy and protection, and business continuity. So even as you develop the ideas that you're working, I strongly think that if you try to go through it alone on your own, the needs and the pressures around financial services, that it becomes very difficult to deliver it on your own. So that's one side. The other is, I know that also financial services, financial service providers, of course, become very guarded of their territory. So one of the things that we have started to talk about, maybe we'll even come back to you for your ideas, is around how to develop API frameworks, open banking in the event of banking, which allows banks to open up their platforms for providers like yourselves in the fintech space to tap into that information and build on. But again, please bear in mind that cybersecurity, data protection, business continuity, those are risks that we all need to be very aware of and design for.
Thank you, Peace, for that. Last one, I think the person who had asked a question around e-money licensing and capital requirement kind of like clarified the missing bit where she wanted you to elaborate on security. So what are some of the requirements around security and insurance money, so escrow funds? If you recall the question that was about.
Yeah, I'm trying to read that here. Could we engage on this separately? It's something that I would probably want to dig into before I give a response that could be misleading, but I'm happy to engage on this further.
Okay.
Yeah, yeah, I can share details on that. It's something that I would need to consult on, and then you can share it with the participants for common awareness or knowledge.
Okay, great. No, that would be wonderful. Thank you. We'll capture some of the questions that we want answer for this session, if you could also elaborate. So one last question. Alex, I'll unmute you to speak if you can make it brief.
Thanks, Peace, for making time to this call and for your presentation and answering our questions. And as you know, we set up this Fintech Hub to facilitate acceleration of fintech companies in Rwanda, and maybe even provide a bridging gap with fintechs and regulators and all the other players. So in your view, how do you think, what do you think as a hub we can do better, or what gaps do you think we can help, especially from the regulatory point of view, to be able to smoothen this process and really accelerate this sector's growth?
Yeah, I think that one, for us to even have this engagement is a great one. and I'd love for it to be, you know, even more frequent. I'm happy to engage as often as you would want us to engage. What I would advise that could be done better is there's power in numbers. Yeah, come to. I'd love to receive a paper from the hub that says, okay, these are our concerns, 1, 2, 3. These are our proposals on how we could improve the way you're regulating or you're supervising, or policy interventions that could open up the space. So I think advocacy advocacy is an area that I think that could be improved. Yeah, let me pose it at that. I think advocacy is really the thing that we can work on.
And thank you for the open door. So data-based, basically, I should say, data-informed advocacy is what I hear you say.
Yes.
Thank you.
Great. And I think this gets us exactly at time. I want to be mindful of people's Friday evening plans. So thank you very much for making the time to speak to us, Peace. As you can tell, we could go on for hours, because I think there are a lot of other questions that are coming up, which kind of like reflect the appetite from the different startup to get to engage more and learn more from the regulator. So I think this, and I'm glad you said there is a room for advocacy. I think it opens up the room for us to engage with you more and facilitate this type of conversation. So thank you so much for making the time and for accepting our invitation. And for all attendees, thank you very much. This wouldn't have been possible also without you. So we thank you for making the time to join us on a Friday evening. So this, yeah, we'll share the link of this recording afterwards. Okay. Right.
Then if I could also request that you share with me the questions that were asked, I'd be happy to provide a more elaborate documented response, which you can then share with the network and yeah, for future reference.
Okay, sounds good. All right. Thank you, everyone.
Thank you. Bye-bye. Have a good evening.
You too. Bye-bye.
Thank you very much. Bye.